like how many Bitcoin will there ever be or something like that. They're like, I don't know. Why should I bother with that junk? You know, they have never even spent 3 minutes studying it. But the German mind, the engineering, the tradition, the appreciation. I mean, you've got freaking Faust. Okay, now reread your Faust. Right, this is what we're doing. The devil's bargain is fiat money. You don't want to be like that because the technology will think, oh, we just figured out how to convert seawater, the gold in
Yeah.
seawater, in extract it from seawater. That's like, a lot of tons of gold out there, or asteroid mining, right? I mean, the supply of gold is elastic compared to Bitcoin, what's inelastic. Now, if any German person just heard what I just said over the past 2 minutes and they're not buying Bitcoin right now, they're not German.
Hey guys, welcome to Everyday Finance. Speculators may seek altcoins for short-term gains and stablecoins for safety. But both inevitably fail, while Bitcoin keeps stealing money from the whole cryptocurrency market. Max Keiser, a supporter of Bitcoin, believes that this consistent flow of value may spark the next significant breakout and push the price of the cryptocurrency to an incredible $2 million. Bitcoin has developed much beyond its initial stages of experimentation. As organizations, corporate treasuries, and even governments start hoarding Bitcoin, adoption is speeding up globally. Nowadays, businesses alone control roughly 3.4% of the supply, which raises demand beyond the reach of conventional currencies. The supply side is rapidly becoming more scarce. There are fewer Bitcoins on the market because long-term holders own more of the cryptocurrency than is being mined. Meanwhile, constant money printing and unrelenting fiat inflation are undermining confidence in established financial systems and driving more capital to Bitcoin's fixed supply substitute. Keiser contends that all other crypto stablecoins and altcoin excitement are merely noise. The unstoppable trend of Bitcoin's mass adoption and acute scarcity is the true tale. He believes that a global repricing of money itself, with Bitcoin leading the charge to $2 million, is the ultimate goal, not just another bull run. Watch the video through to the conclusion as Max Keiser explains why all market diversions eventually fade away and why. Bitcoin's last chapter has the potential to redefine wealth on a monumental scale.
Well, who invented the wheel? Who started fire? It doesn't matter. It's God. Students in Bristol, UK, came on the show to demonstrate how easy it was to create a shitcoin, and they called it Maxcoin.
And that's what happened.
From then on, I became associated with that. But I never, it was a demonstration of how easy it was to create a shitcoin. But of course, in the juvenile minds of the average shitcoiner, they took this as something other than that. Like 3 million of them or more that have been created. They all follow the same price pattern. They spike, crash. And I think that in this cycle, the Bitcoin dominance is now rising again. And the shitcoin market will go to zero against Bitcoin because everything does. And there's competition now in the Bitcoin treasury companies, like GameStop, was an interesting story because they figured out that the hedge funds were short more GameStop stock than existed using naked short sales, which is something I've talked about before. So there was more stock sold short than existed in the float, because you're able to attack a stock price down to zero, and then you never have to cover your short. And so it's all profit. And that's a game that the Wall Street Bets people figured out. And they went on their Reddit chat board and got millions of people aware of this. And they started buying GameStop, which created a short squeeze, and they made money on that.
Wasn't it?
Well, yeah, it's true. They focused on GameStop because, for a lot of different reasons, and they ignored Bitcoin. That's true. And now GameStop, of course, they ended up with a lot of cash, and they're putting some of that cash into Bitcoin. And they haven't yet put a lot of cash in Bitcoin, but they're kind of sniffing around. So that will bring in a lot of those people that would ordinarily sell and be involved in shitcoins, the on the chat boards and on the periphery, and the degens as we
Yeah.
call them, they have now something that's traded at Schwab. It's easy to do, and they're going to, that's where the focus of attention will be. It won't be on these unregistered, unlisted, hard to find meme coins. That's just too cumbersome to do so. They can just do GameStop, or now there's a lot of these other penny stocks or penny price
True.
types of treasury companies, and they're popping up all over the place. So that's really where that speculative degen market is headed. So they're going to walk probably away from what we call the shitcoin market. So I think the days of the shitcoin market are over, because there's other options now that these folks who trade in that market will find easier and more to their liking. Whereas a player like MicroStrategy, I don't believe that they would ever sell their Bitcoin, and any price pullback they would use as a buying opportunity, even if the Bitcoin were trading at a discount to their stock price. They wouldn't sell stock to buy back Bitcoin, if I got that correct. I may have gotten that
They wouldn't
backwards.
sell Bitcoin to buy back stock, is what you're saying.
So whereas a company like over there at Bitcoin Magazine, they have Nakamoto, and they've already stated they would. So they're not thinking about Bitcoin, they're thinking about their stock. So on a pullback, you're going to have a lot of these companies sell their Bitcoin and buy back their stock. So that will create a pretty significant pullback in Bitcoin price. It's a fool's errand to say what the price target is, because people get obsessed with timing the market, and then they use it to my message, I think, is worth listening to. But if you go to social media and they're like, well, Max Keiser said this, and someone says, but he predicted the price to be XYZ on such and such a date, therefore, how credible can he be, right? So they don't want to focus on the message, was that everything goes to zero against Bitcoin. I also have another thing to say about this. If I gave you both the price target, because the next question you're going to ask is when, what date, okay? If I gave you both price and date, like I can, you would burn me at the stake as a witch. So to protect myself, all I can say is it's going higher. I'm not going to give you a price and date, because you'll be like, my God, that's so spooky. You're a witch, and you'll report me to the authorities, and they'll bring me down to the center of the square and light me on fire like Joan of Arc or something. I don't want that. I don't need to be lit on fire. That's not me.
According to Max Keiser, Bitcoin is the financial black hole that is attracting cash from all around the world. It's not a gambling opportunity. With worldwide Bitcoin ETFs managing over $179.5 billion, institutional adoption is currently happening more quickly than ever before. With U.S. funds accounting for the majority of the growth, concurrently, corporate treasuries are quickly amassing Bitcoin, increasing institutional holdings to roughly 1.86 million BTC, a more than 50% increase in only 1 year. The pressure is increasing on the supply side. Bitcoin's liquid supply is decreasing as a result of halvings that restrict new issuance, more coins being locked up by long-term holders. Because of this tightening dynamic, there is less Bitcoin available on the market, which increases scarcity at a time when demand is skyrocketing. According to Keiser, these factors increasing institutional demand, declining supply, and the unparalleled scarcity of Bitcoin all suggest that the asset will undergo a significant revaluation. According to him, Bitcoin is poised to surpass all past price ceilings and reach an all-time high of $2 million per coin.
Oh, you're taking the easy way out. I thought no, Austrians were hardworking, industrious people. 90% of all engineering manuals in the world before World War I were written in Germany, written in German.
Yeah.
Germans were the engineers of the world. They still are, right? But do they need instant gratification of price prediction? No. Okay, stick to your Teutonic soul, the vision of a well-engineered future. Bitcoin is a masterful engineering job. It's beautiful in its incentive structure. It's the Sistine Chapel of money, right? And here you bring in this tawdry price prediction narrative, And that's meaningless to the folks. I mean, it's like saying, how much is the Sistine Chapel? How much is the Mona Lisa? I want to buy it. I mean, what vulgarity. Just let it be art. Let those thousands of people go to the Louvre every day and be enhanced spiritually by the presence of this fine work of art. Just sit back and enjoy the glory of Bitcoin. Let this radiate the sunshine of its enormity and beauty and spiritual qualities. Inflame your soul to be more of a human and to understand the aesthetic. You don't need to be a fucking junk food eating pig. You can be human. Satoshi, what will I do? What should I do? Give me help. Give me guidance. Gold.
They're obsessed with Bitcoin
Okay.
as well.
Well, not as much as they should be.
Yeah, that's true.
Okay. So, if you like gold, you need to study Bitcoin, because everything you like about gold, you will like about Bitcoin, but more so. Okay. So to your German audience, if you have, let's say, a portfolio, and a German portfolio on average would have a decent percentage in gold. That's like the model that you would find in Germany. They have a long-standing tradition of owning gold, and the country is one of the biggest gold owners in the world. We won't get into too many details there, but nevertheless, they have a lot of gold. And so if you're looking at your portfolio before tomorrow, or sun rises tomorrow, put 5% of your gold into Bitcoin today, and then wait 2 weeks or maybe 2 months. And I guarantee you that you'll end up buying more Bitcoin, because once you own it and once you start feeling the effects of it and you start to think about it, you want to own more of it. It's like Michael Saylor has said, anyone who spends the time to understand Bitcoin, it never becomes a critic of Bitcoin. There are no critics of Bitcoin. There's not a single critic of Bitcoin on planet Earth who has also spent time understanding Bitcoin, put in the necessary 200 or 300 hours to really study Bitcoin. At the end of that process, there are no critics at all. Every single person who's critical of Bitcoin, when you ask them a basic question, very basic question, like how many Bitcoin will there ever be, or something like that, they're like, I don't know. Why should I bother with that junk? They have never even spent 3 minutes studying it. But the German mind, the engineering, the tradition, the appreciation. I mean, you've got freaking Faust. Okay, now reread your Faust. Right, this is what we're doing. The devil's bargain is fiat money. You don't want to be like that. It's like simmering and it's percolating. We went to the Bundesbank once. Funny story, and we visited them on I think it was 2008, when the Fed had an emergency rate cut. And we were actually in the Bundesbank to do a little film. And we were talking to them, and with one of their tour guides, or it wasn't necessarily a tour guide, but this woman was public relations, I would say, for Bundesbank. And so we had the cameras rolling, and I said, so can we see the gold? And she's like, oh, no, of course not. And it's like, why? She said, because it's in New York.
They're getting it back now, though.
Okay, but
they got half of it back already, and now they want the rest.
Until that moment, nobody from the Bundesbank had publicly stated that the country's gold was actually not in the Bundesbank. There's never publicly stated. So we made this film, and they were frantic about, don't put this film out. Don't do this film. So anyway, of course, we showed it, and it set off a firestorm. If you look at the media at that time, it's like, it was a pretty big story. Bundesbank insider admits that they don't have the gold, so and you say you got half of it back, right? Well, to get the other half of it back, you've got to find it, you've got to load it, you've got to transport it, you've got to insure it, you've got to assay it to make sure it's real gold, you got to redeposit it, and it's going to cost how many tons are we talking about? 1,000 tons, maybe?
Yeah, it's more like 1,500 still. That's not
1,500 tons. So the equivalent of in Bitcoin, think about it. To move that gold from, I think it's in New York or London, to Bundesbank, 1,500 tons of gold, and the dollar equivalent, versus the same dollar equivalent in Bitcoin. I have a seed phrase in my mind.
Yeah.
I can walk naked through the airport, go anywhere in the world, and have that available to me. Now, as a gold buyer, that argument alone should convince you of the superiority of Bitcoin over gold. Plus, the transaction is the verification of that transaction. You don't need a third party, right? It's more divisible, obviously. It's 100 million Satoshis per Bitcoin. It's absolutely scarce at 21 million coins, where gold supply increases, what, 3% a year? And if the gold goes to $5,000-$6,000 an ounce, you're going to find a lot more gold suddenly, because the technology will think, oh, we just figured out how to convert seawater, the gold in seawater, extract it from seawater. That's like, a lot of tons of gold out there, or asteroid mining, right? I mean, the supply of gold is elastic compared to Bitcoin, what's inelastic. Now, if any German person just heard what I just said over the past 2 minutes, and they're not buying Bitcoin right now, they're not German.
Due to institutional demand, spot Bitcoin ETFs have grown to hundreds of billions of dollars, providing significant financial institutions with a potent new tool for trading and allocating capital within the Bitcoin ecosystem. With market capitalizations far into the triple digits, stablecoins have simultaneously expanded into a huge, marketable dollar alternative. These virtual currencies serve as conduits for liquidity, directing enormous amounts of money straight into Bitcoin markets. Additionally, corporate and institutional treasuries are acquiring Bitcoin at an unprecedented rate, transferring a larger portion of the supply into long-term illiquid hands. As hoarding increases, fewer coins are available on exchanges, further tightening the market. In the meantime, central banks are stepping up their efforts to introduce digital currencies by testing and piloting CBDCs, which would bring state-controlled money online. Paradoxically, this change simply serves to solidify Bitcoin's standing as the real substitute, decentralized, unregulated currency. When combined, these patterns, corporate accumulation, stablecoin liquidity inflows, institutional adoption, and the emergence of centralized digital currencies led to the same conclusion. Bitcoin will firmly establish itself as the most robust and autonomous currency in the world. The question at hand is not if Bitcoin will hit 7 figures, rather whether it will do so much sooner than everyone anticipates.